You've heard it before, but it bears repeating. America's budget deficit is growing, and growing fast. It's like a ticking time bomb, and the clock is running out. Let's dive in. This past year has seen the budget deficit swell by an astounding $2 trillion. And what's surprising, this happened while the economy was booming. It's a paradox that has us all scratching our heads. But there's more to this story. Our deficit didn't just appear overnight. Its growth was fueled by a bipartisan collaboration. Republicans and Democrats alike have stoked this fire through their own unique methods. Wars, financial crises, tax cuts, and stimulus programs have all contributed to this mounting debt. The result? We're sitting on a fiscal powder keg, and with each passing second, the fuse burns a little shorter. The alarm is ringing, and the next president faces a critical decision that could either defuse or detonate this fiscal time bomb. So, what's causing this debt pile to grow? And more importantly, what could it mean for America and the rest of the world? The causes of America's growing budget deficit are multi-pronged. One significant factor is the decision to renew tax cuts, a move that many believe could worsen the fiscal situation. These tax cuts, initiated by the Trump administration, have been a hot topic for both Republicans and Democrats, who have each contributed to the deficit through their respective policies over the years. But it's not just tax cuts that are causing the deficit to balloon. Rising interest rates are making servicing the debt more expensive. As the rates climb, so too does the cost of the debt, creating a vicious cycle that's hard to break out of. Now let's consider the potential consequences. Experts warn that the national debt could soon exceed 100% of the gross domestic product. In simple terms, that means the country's debt could be larger than the total value of all goods and services it produces in a year. And the fallout doesn't stop at the borders. The impact of America's growing debt could reverberate around the globe. If the US economy stumbles under the weight of its debt, it could send shockwaves through global markets, affecting economies far and wide. Inflation is another potential consequence. Economists warn that without significant changes, inflation may be the only way out of America's reckless borrowing. Inflation can erode the value of money, causing prices to rise and the purchasing power of the dollar to fall. The dominoes are lined up, and the first one has already started to fall. The question is, can we stop them before it's too late? But, let's be clear, America isn't the only one grappling with a mountain of debt. As we navigate the complex landscape of global finance, it's crucial to understand that rising debt levels aren't unique to the United States. In fact, it's a worldwide issue. Now, it's easy to misconstrue the nature of this debt. One common misconception is the idea that the entire debt must be paid off immediately. In reality, what matters is the ability to manage interest payments and maturing bonds, not necessarily the total debt amount. Moreover, it's important to remember that debt isn't inherently bad. It plays a pivotal role in funding government functions and investments. After all, it's the fuel that drives economic growth and development. However, this doesn't mean we can keep piling on the debt indefinitely. While the US is not facing an immediate debt crisis, a more moderated approach to spending can go a long way in ensuring long-term fiscal health. America might be leading the pack in the race of debt accumulation, but it's certainly not running alone. So, what's in store for America's fiscal future? Well, the forecast isn't exactly sunny. As we gaze into the crystal ball of economic projections, the figures we see are staggering. Picture this: the US debt reaching $50 trillion in the next 10 years. Yes, you heard that right, 50 trillion. That's an astronomical amount, one that's hard for any of us to truly comprehend. But the storm doesn't end there. Imagine the potential for net interest payments on the US debt rising significantly. We're not talking a slight breeze here, but a full-blown gale. With the winds of debt blowing stronger and stronger, the cost of simply servicing this debt could become a major burden on the economy. And the downpour continues with the possibility of public debt reaching an unprecedented 181% of GDP by the year 2053. That's nearly double the current rate. This is not just a shower we can wait out, it's a deluge that could drown us if we're not prepared. Now you might be wondering, what does all this mean for the average American? Well, in the simplest terms, it means economic instability. It could mean higher taxes, less government funding for essential services, and a more challenging environment for businesses. In other words, it could make the American dream a lot harder to achieve. The storm clouds are gathering on the horizon, and it's time for America to start building some fiscal shelter. America's growing budget deficit isn't just a problem for politicians and economists. It's a problem for all of us. We've walked through the alarming figures, the causes, the consequences, and the looming storm on the horizon. But it doesn't end there. This is not a story that can be closed with a full stop. It's a continuing saga, a narrative that we as a society are writing together. The sheer magnitude of the debt, the potential impacts on our lives, our children's lives, the very fabric of our society. These are not just abstract numbers on a page. They're realities that could shape our future. The importance of public understanding and awareness of this issue cannot be overstated. We need to be aware of the choices being made on our behalf, the decisions that could potentially steer the course of our nation's economic future. We need to hold our leaders accountable, to ask the tough questions, to demand transparency and responsibility. So stay informed, ask questions, and demand answers. The future of our economy depends on it. And remember, if you want to keep up with the latest economic news and insights, don't forget to subscribe.